A very, very warm welcome to all of you to this live coaching classes. I am CA Ridhima Bhatia, and we are discussing profits and gains of business or profession for your paper 4 taxation part A income tax law. So till now, we have discussed various deductions from section 30 to 35 DDA for you people, and we were discussing section 36 in the previous class. So for today, we'll be discussing section 36, section 37, which are all our deductions admissible. Then we'll be discussing inadmissible deductions. Then we'll be discussing some other provisions. We'll be discussing section 41, deemed income for PGBP. So today our coverage would be limited to these sections. Along with that, we'll be doing mandatory section 44AA and 44AB. So I hope everyone had the time to go through the points which we discussed in the previous class. If there's any query, you can drop in and we'll discuss. So we discussed up till section 36, subsection 1, clause 3. I'll quickly repeat them. So first was section 36, subsection 1, clause 1 was about the premium of insurance premium of stock. Anything which is in relation to business for stock, and if you're paying the insurance premium on it, you will get the deduction for it. Then we discussed section 36, subsection 1B, which is the health insurance premium which an employer pay for the health insurance of the employees. That is also deductible provided that is not paid in cash. Then we discussed about bonus and commission for services paid to employee. Any amount of bonus or commission is actually paid during the year or before filing the return of income would be allowed as deduction. Here it is immaterial whether that bonus is as per Bonus Act or not, but that would be allowed as deduction. Then we discussed about interest paid in respect of capital borrowed. Any interest which you have paid for capital which is being borrowed for the purpose of business and profession. For the purpose of business and profession would be allowed as deduction. But section 43B, which is a deduction based on actual payment basis made, there is one clause that when you are paying interest to any banking company, NBFCs are non-banking finance companies, PFI, state finance corporations, to all of them, when you're paying the interest, the deduction would be allowed only when it is paid on or before the due date of return filing. It has to be actually paid. But if on the other hand that interest is paid on a capital borrowed from a friend, relative, or any other person other than the one which I discussed, then in case mein accrual basis pay, you would be allowed interest. So this is what we did up in the previous class. So now moving forward, is our next part, which comes as generally as an MCQ if it comes. Section 36, subsection 1, clause 3A, pro rata amount of discount on zero coupon bond having regard to the period of life. What is this? So I hope you people have an idea of zero coupon bond. And in case you do not have an idea, let's discuss what zero coupon bond is. Now, student, zero coupon bond is a short-term financing instrument. Click yourself back to 11th economics or business studies where you must have studied this term, zero coupon bonds. So, isme what happens is that a person who needs money on a short-term basis take that money and then he repays back But it is a there is no interest in relation to it when we see prima facie because there is no interest rate. But here what happens is that it is said that it is issued at discount but redeemed at par. What do you mean by that? Issued at discount and redeemed at par. So suppose a zero coupon bond I financed by issuing zero coupon bond. I finance by issuing zero coupon bond. I need money. I issue zero coupon bond. For that, I will receive 90 rupees. For that, I will receive 90 rupees. And when I have to repay it, I will repay 100. So this 10 ka difference is basically the finance cost coming with this zero coupon bond. So when I'm taking money, I'm taking less, but when I'm paying it in full. So the difference obviously is the cost which is coming with the zero coupon bond. Correct? When think yourself as a person, as a businessman, आपने किसी से 90 लिए, now you're repaying them 100. That means that 10 is your sort of interest cost. Correct? So this is allowed as deduction in your P&L account or deduction from your PGBP income. But one thing you have to remember is that this is allowed basis calendar months. Basis calendar month. Why it is relevant? Suppose, and generally this is a short-term financing somewhere between 3 to 6 months. So suppose we talk about an example where I took 150 rupees and on payment I had to pay 200. The difference is 50. Correct? You will say the difference is 50. But I took this on 1st February, March, April, May, June. And I need to repay it on 30th June. This 50 is the interest, the cost in relation to it for 5 months, right? So 50 divided by 5 per calendar month, it is coming to 10. It is coming to 10. But in my fiscal year, only 2 months are following. Only 2 months are following. So my deduction allowable for, say, financial year 21-22 would be how much? Would be just 20 in relation to cost of zero coupon bond as per section 36 subsection 1 clause 3. Clear? So simply, very quickly, the difference you have to calculate, the difference would be your interest, sort of interest to zero coupon bond. That would be divided for each calendar month, and the calendar month which falls in that fiscal year would be allowed as deduction. Next is contribution by employer towards recognized provident fund or an approved superannuation fund. I think this we all know by now that if an employer is making and also this section 36 subsection 1 clause 4 and clause 5 are almost similar. Clause 4 may we are talking about employer's contribution to recognized provident fund or approved superannuation fund, and clause 5 may we are talking about employer's contribution to approved gratuity fund for the exclusive benefit of employees. So let me just quickly brush up your concept for provident fund, which we discussed in the salary chapter. But salary mein you were the employee, you were on the receiving end, but now you are the employer. So any contribution which the employers make, that is my cost, that is my kharcha, right? That is my expense, sorry. Correct? I am, instead of giving it to employee, I am giving it to a fund for the benefit of employee, right? So this employer contribution should be an admissible expense for me, should be an admissible deduction for me, correct? So this employer's contribution is an admissible deduction provided the contribution has been paid, before the due date of return filing, on or before the due date of return filing. But here also one more catch is that we are talking about employers' contribution to approved funds, like approved gratuity fund, approved superannuation fund, recognized provident fund. If the contributions are made to any unapproved fund, unapproved URPF, or any such unapproved superannuation fund or unapproved gratuity fund, then no deduction would be allowed. Clear? Next is छोटा सा simple सा deductions है. Section 36 subsection 1 clause 4A. Employers' contribution towards national pension scheme. National Pension Scheme, Atal Pension Yojana. So National Pension Scheme may also the employers make the contribution, the employee make the contribution. Employers contribution is also allowed as deduction, just like what we discussed in clause 4 and 5. But here there is a ceiling limit. That means there is an upper limit to it, that maximum contribution which can be allowed as deduction is up to 10% of basic plus dearness allowance for retirement benefit salary. So 10% of salary or the actual employee's contribution, whichever is lower, would be allowed as deduction. Again, here also 43B will come into picture, provided that is being paid on or before the due date of filing the return. If it is not paid, no deduction would be allowed. If you have claimed deduction, you will add it back. So if the deduction is claimed in the P&L given to you, you will add it back. If it is not claimed, you will and if it is not claimed and you have not paid on or before the due date of return filing, you will not claim it. So basically, again, remember the first class का concept, allowable है, impact नहीं है, only then you will take the impact of deduction. Allowable है, impact already है, then no impact has to be taken. So if the expense already has been impacted in your P&L account which is given to you, then no impact would be taken for an allowable expenditure. So if we can take one question on this. Everyone on the screen, X Limited contributes 20% of basic salary to the account of each employee under a pension scheme referred to in section 80 CCD. 20% of basic. Dearness allowance is 40% of the basic salary and it forms parts of the pay of the employee. Compute the amount of deduction allowable under section 36 subsection 1 clause 4A if the basic salary of the employee aggregates to 10 lakh. Would disallowance under section 48(9) be attracted? If so, to what extent? So ye wala part obviously I have not touched. So first we'll do this part. Section 36 subsection 1 clause 4A के according the employer's contribution to national pension scheme is allowed, but up to 10% of salary, and salary is basic plus DA. So 20% of 10 lakh is what the contribution has been happened, which is 2 lakh, correct? But what do we have to see? 10 lakh plus 40% of 10 lakh, which is 14 lakh ka 10%. 14 lakh ka 10%. So the eligible contribution is 1,40,000. So what would be allowed under section 36 subsection 1 clause 4A would be 1,40,000, correct? But whatever, so 40A9 is kya? What is allowed under section 36(1) 4A, and what is disallowed under section 40A subsection 9. So difference kya hai? Student 40A subsection 9 or 36(1) 4A mein. So the contribution is basically total contribution hai, which we just read. Two lakh में से how much is allowed? 140. So this 60,000 is the disallowed amount. Iska disallowance for section is 40A9. And here 40 clause 9 and iska allowance for section is 36(1) 4A. So if an MCQ comes at what is the disallowance under 40A9, so the answer would be this. But if an MCQ comes, what is an allowance under section 36(1) 4A, that answer would be this. It's just the breakup of the whole contribution into allowable part and disallowed part. Okay. So if employer's contribution to NPS scheme ka disallowance happens in 40A9 and allowance happens in 36(1) 4A, because up till 37 are the allowable sections, admissible deduction sections. Clear? Next is section 36 subsection 1 clause 5A. Here please pay attention, please. Section 36 subsection 1(5)(a) says amount received from employee as contribution to welfare fund to be allowed only if such amount is credited on or before the due date. अब इसका concept समझना in actual how account things happen. Take a recognized provident fund in mind, okay? अभी recognized provident fund में what we have two parts, employer contribution and employee contribution. Employer contribution and employee contribution, correct? Employer contribution ko we saw that it is deductible under section 36(1) clause 4. Right? Correct? Any doubt? No. Think yourself as a person, as a business. Now, employee contribution kya hai? Employee contribution is like employee is making a contribution in his own fund. Right? So you will say, how is this impacting an employer ka PGBP? Your question would come in mind that this contribution is by the employee to the fund. Correct? But why we are discussing this in PGBP of an employer? In the profits and gains of business of employer. So students, practically what happened is this contribution by employee to provident fund is routed through employer. So employer collects employee contribution, add his own contribution, and then by 15th of the next month, for every month, he deposit the contribution. So what if the contribution is 100 of employer and 100 of employee, so 200 would be deposited by employer, on which 100 he has recovered from employee. So it's like 100 tera liya, 100 mera, and then we paid to the provident fund. Okay, this is what happens. So employee contribution is actually routed by employer, and he collectively, generally he collectively pay to this fund. Okay, clear? Any doubt? No. But so up, I have received this 100 rupees in my bank account, right, from the employee. I have received this 100 rupees in my bank account from the employee. This 100, if credited in my bank account, you say that it's an income because you have received it. But it's just like I'm an intermediary and I have to transfer it back to the provident fund, right? But they say that if an employee contribution is received for the fund, for the employee benefit fund, and if it is not transferred within the due date, and if it is not transferred within the due date of not return filing in this scenario, within the due date of depositing it to the fund, and it is not transferred within the due date of depositing it into the fund, which is 15th of the next month, then in that case, this 100 would be taxable as the income. Or you will say that this 100 you will not get a deduction on which you have already added. So this 100 would be taxable. There is no deduction allowed on this 100 of employee contribution. So here, two very important things. Ma'am, why abhi tak employer contribution mein what we were doing? Employer contribution will be studied under this clause that if it is paid to this fund, but within the due date of return filing, income tax return filing, then this was allowed as deduction. But employee contribution may, if the employer does not pay the contribution which is recovered from employee under section, which is recovered from employee, to be paid to the provident fund of the employee, and if he does not pay within the due date of the provident fund, then this amount would become taxable. You will ask them why so within due date of provident fund and not within due date of return filing. So the income tax department says that you have received a paisa, you have received someone's money. The only thing which you have to do is you have to pay it. Fund shortage is not an issue because you have already received the money. So the only thing which you have to do is pay to the provident fund. That's it. यहाँ पे तो चलो we understand that you have to arrange money to pay it to the provident fund as a contribution, but here though you have taken it from him. The only thing which you had to do is just to deposit it into the account, and if that you're not doing timely, then you will not be allowed the deduction. Clear? So in practical concept, he does not generally क्या होता है, employee से contribution नहीं मिलता, he deduct the part of salary as employee contribution. This is in practical life, but you understand it that he has received it from employee. You have received it from employee, and he has to pay to his provident fund within the time. Clear? So employer and employee contribution में treatment in the hands of employer is different. Treatment in the hands of employer is different. Here, this is uska contribution which he has to make, and here it is employee ka contribution which he has received, and he just has to deposit it. Harsh, I am not sure about the chapter which you're talking about. Please write down a mail, or else what I can do is I can forward it to the concerned team and they'll look into it. Achha, should we remember all the sections? Sections, when you talk about PGPP, yes, if you can. I think section 32 is most important. 36, 37, that you know, it's an admissibility section. 36 में subsection, if you can remember, nothing like that. But if not, at least remember कि 36 में what all part comes. Vandana, in zero coupon bond, the difference which is called discount is distributed over calendar year month coming into the previous year. Calendar months, I mean to say, is कि जितना उस previous year में calendar months come, that would only be allowed as deduction for those months only. Rohini, if not deposited within the due date of the fund ka due date, which is 15th of the next month, every month, the contribution of a particular month has to be deposited by the 15th of the next month. So if he is not depositing employee contribution within this days, then it is disallowed. But for his contribution, he has a time up till due date of return filing of the income tax, which is 31st July for the assessment year, generally, or 31st October. Chalo. Great. Next is animals used for the purposes of business or profession, otherwise as stock, and have died or become permanently useless for such purposes. Remember when we were doing depreciation, I told you livestock with depreciation is not chargeable, right? Correct. Livestock with depreciation is not chargeable. Now think yourself who's a person who's into the business of milking, right? So cattle is his assets in a way, right? But you will say, ma'am, assets to hai, but depreciation to allowed nahi, correct? So livestock ke case mein what happens when that animal dies, uspe whatever expense was made, whatever basically whatever the cost was there to purchase that animal, uska you get the deduction. So एक साथ once the animal becomes useless, so whatever value you had spent on you purchasing that animal would be allowed as deduction. Okay, not very important. Next is very important, section 36, subsection 1, clause 7, bad debts. Bad debts. I think bad debts very, very, very important. The student bad debts क्या होते हैं? For a business, any amount which becomes irrecoverable of revenue nature, right? That is called bad debts, जो आप P&L में लेके जाते हैं, correct? I think 11 से we are doing accounting on that. Bad debts का provision for bad debts is not allowed. The provision, मतलब actual bad debts are not there. The provision for bad debts is not allowed. Provision for bad debts is not allowed. It is allowed only to banking concerns, but it is not at your level. So you have to remember this: provision for bad debts is not allowed. So if in P&L provision for bad debt is deducted, what you will do? You will add it back. You will add it back. Okay, correct? Sure. What about actual bad debts? Actual bad debts. So one thing which I just said a minute back, that bad debts which are in relation to revenue would be allowed as deduction, because we are talking about admissible deduction. So bad debts in relation to revenue would be allowed as deduction. In relation to revenue means in relation to sales which have happened. In relation to sales which have happened. Simple as a concept. If the sales I have not treated that as income in my P&L account, in later year or in later time when it becomes bad, if I have not treated it as sales, then I cannot treat it going bad as an expenditure or as a deduction. Simple. If I'm not treated it as a part of income, then how I can treat it as a part of loss in my P&L account? So if any actual bad debts happen on a loan which is given, then will it come here? No. Will it come here? No. Why? Because it is not in relation to sales. Why? Because it is not in relation to sales. So actual bad debts in relation to sales would be allowed. And sales ka concept you got clear, because what has become part of P&L earlier would only be allowed as deduction. Okay, and loan never goes through the P&L account. Loan giving, you giving a loan never is never routed through a P&L account. So loan only. When we talk about loan being going bad, it will not be an admissible deduction. Until and unless you are into a money lending business, obviously. Until and unless you are into a money lending business. Clear? Sure. ICDS related, one thing they say is that the amount should be actually written off in the books of accounts. But again, ICDS are not applicable at your stage. So you understand it as this basic concept. Okay. Now what has happened is, now we have actually written off bad debts. This is the part of section 36 subsection 1 clause 7, because it said loss to us. It's like a loss to us, so it is admissible. Now what happens, students, if it is recovered? So just moving myself apart to another section, section 41. If a bad debt recovery happen, let's say that I made a sale to Radhesham for rupees 50,000. Okay. I have made a sale to Radhesham for rupees 50,000 in financial year 18-19. In financial year 19-20, I get to know that only 30,000 was able to recover from him. The remaining 20,000 has gone bad. So in financial year 19-20, I would have claimed deduction on this 20,000 under section 36 subsection 1 clause 7. So it is not necessary that sale should happen in that year itself to claim that actual bad debts. No, bad debts can be for the sales which has happened in the previous years also. Okay. So financial year 19-20 May, 20,000 gone bad and I claim deduction. Now luckily I don't know what happened to this guy. He came in financial year 21-22 and gave me 15,000. Okay, I had to give it to you and this is your amount. So he gave me 15,000. Ab kya hua? Bad debt had happened in 19-20. Now I have recovered the bad debts. So this 15,000 would become my income for the year 19-20 under section 41. Even if I'm not running the business, then also, even if I am not running the business, then also it will become my income for PGBP for that year. Simple. Again, I'll say bad debts gone, bad debts went bad, or the debts went bad. Claims deduction, recovery happened. Income from PGBP. Income for PGBP. Simple. Now here, this is simple concept clear, but here one catch you have to remember is if sometimes what we claim may not be allowed by the AO. Assessing officer may not allow it. Assessing officer may think that he has unnecessarily claimed a higher bad debt. Maybe the chances of recovery is there and he is unnecessarily claiming it. So he may not allow it. He may not allow it. So whatever is allowed by AO, that only would be taken as admissible deduction under section 36, subsection 1, clause 7. So if I talk about an example, my bad debts as per my books were 1 lakh, okay. But AO allowed only, or say 1,50,000. Listen carefully, this is thoda sa technical. So 1,50,000. AO allowed only 1 lakh. This 50,000 goes not allowed. Correct? Yes. So what would have been claimed as deduction is this 1 lakh under section 36, subsection 1, clause 7. Simple. What is not allowed cannot be claimed. Now what happened in the subsequent year? There has been a recovery of 70,000 from this bad debt. So suppose Mr. X has gone bad. I was saying 1,50,000, but AO allowed only 1 lakh. So he thought that 50,000 mil jayega. Okay. Now what has happened? This was for the financial year 2021. Now what happened in financial year 21-22? I recovered 70,000 from Mr. X. I recovered 70,000 from Mr. X. Now think, what should be the amount taxable as income under section 41 chargeable to PGB? What should be the amount taxable as income? Full 70,000? Recoveries of 70,000. So will you say it is full 70,000? I say no. I say no. Why? Because 70,000 may say 50,000 was not allowed by you. 50,000 was not allowed by you. So 50 had never went bad. 50 never had went bad in my books of account. It was still standing in the debit of Mr. X. It was still standing in the debit of Mr. X. So अगर मैं journal entry से समझूं, I had to take Mr. X say 1,50,000 to sales account. Okay, this is one entry. AO only allowed how much? AO allowed bad debt only for 50,000. So bad debt, 1 lakh, sorry, bad debt to Mr. X account. 1 lakh, right? $50,000 is still a debit balance to be recovered. Now this 70,000 is recovered. What will happen? What would be the entry go? Mr. I have received cash, suppose, sorry. You will say cash account debit 70,000. X के account में जो only 50,000 was there, so I debited 50,000 which was recoverable. Take a ledger account in your mind. So what do I make? So the balance would be my bad debts recovery, which means for 20,000. So my income for financial year 21-22 would be 20,000 and not this 70,000, because 70,000 even if recovered, it's to say 1 lakh only was allowed, 50,000 was not allowed. So 50,000 was not allowed means 50,000 did not went bad and it was still standing into the credit of the debtor. It was still standing into the credit of debtor. So when an amount is received, the additional which was only treated as expense, the part of that would be considered as bad debt recovery. Clear? So this typically happens in situation where AO allows the amount lesser than what you have claimed. Okay. In general, what in general is what this happens, where you claim bad debt and in later years receive a part of it or the whole of it. Take your moment to understand it and then we'll proceed. So, is it clear? Rohit, I'll see. The point is, do not panic. Jitna kar rahe ho, try to do it in a best possible way. Uh, Cover it from all the aspects, cover it from RTP, cover it from MTPs, cover it from the book. Make small notes, re-revise it. So at least you know that what I have done is 100%, right? Instead of focusing on covering the whole subject, first cover what you know in a best manner, then proceed. I'm not saying you just do 10% of the syllabus and say, okay, I've covered it. No, step by step take an approach. And obviously, the idea is to cover all the concepts, to cover all the chapters, but first make sure that instead of rushing to cover all chapters and each chapter, it is half prepared. So make sure that you prepare each chapter in full and then proceed. So एक tension तो would be clear from mind and then would be the focus on the बचा हुआ part. Yeah, this is the concept of bad debt recovery. That bad debt recovery would be taxable in the year when it is actually recovered, and it is totally purely here. The taxability is purely based on the journal entries. If your journal entries concept is strong, if your journal entry concept is strong, one second, then taxability is pretty much clear on that part. Relate yourself as a businessman. Pooja Gajjar, we take 10, or in Chandra Gajjar, we take 10% of basic salary and actually receive whichever is actually received me actually contributed, whichever is lower, not whichever is higher, lower. Correct, Rohini, bad debts only on sales because the amount which is rooted through PNL, usi ka loss only you will claim in PNL. Na? If anything is not rooted in PNL, why would I claim the loss for it? Next student, it's subclause 9, section 36, subsection 1, subclause 9, expenditure incurred by company for the purposes of promoting family planning among its employees. Family planning among its employees. So generally company assessee को क्या होता है? This is only for company assessee. Okay. So company assessee conduct family planning drives, family planning promotion drives, so they to promote in the common welfare of the employees. Okay. So obviously when they are making deduction on it, when they are making expenditure on it, they can claim the deduction. When they are making expenditure on it, they can claim the deduction. So revenue expenditure is 100% allowed. Capital expenditure is allowed, but in 5 installments. But in 5 installments beginning from the year when the expenditure is actually incurred. Okay. Again, not very important. Then security transaction tax and commodity transaction tax, clause 15 and clause 16 respectively. Security transaction tax and commodity transaction tax, when it's allowed and why is it allowed. First, let's understand it. One liner is given in your book, but first let's understand. I told you only PGBP is all about business ka income, business ka expense. Business ka income and business ka expense. So clause 4 and clause 6, 15 and clause 16 we are coming. So if my business is into trading of shares, then what happens is that is my business. So what, instead of, in general, if you're investing into shares, the sale and purchase goes and make an impact in your capital gain head. Remember, back to first class, the PGBP is decided by the regularities intent of doing a particular transaction. It can be a capital gain income for one and a PGBP income for other. Remember this concept? The trading of shares, a person who's into a proper trading of shares, for him, this would be a PGBP income. This would be a PGBP income. So any profit which is happening, that is when sale price is more than your acquisition cost, that is profit. When sale price is less than your acquisition cost, that is a loss. So that you are taking it to your P&L account. That is obvious. So security transaction tax, which is called STT, is to be paid for every transaction which you do on a regulated stock exchange. Security transaction tax is to be paid for every transaction. So security transaction tax is what as an expenditure? Is an expenditure for this person who is trading into shares, and that income is, and this income of who is treated as a PGBP income. So security transaction tax would be a deductible expense for a person whose income from trading of shares is a PGBP income. But a security transaction tax for me or you who is investing in those shares from the point of view of investment, as an investment, that security transaction tax would be not a deductible expenditure under section 36 subsection 1 clause 15. Why? Because that uska income is not the one which is taxable under PGBP. It's not taxable under PGBP. So simple, only for those assessees who is taking the trading of it as a PGBP income, only for those assessees STT would be allowed, or security transaction tax would be allowed as deduction. Only for those. Similarly, there is commodity transaction tax. Commodity transaction tax is also similar, but इसमें क्या होता है? Instead of trading in shares, you trade in commodities online. You trade in commodities. Commodities like gold, silver, natural gas, crude oil. So if you are trading on the values of it on futures and options basis, so that is called commodity trading. And commodity trading pe there is a commodity trading tax. So just like shares pe there is security transaction tax, CTT is there on commodity trading. So if commodity trading is becoming part of your PGBP income, this would be allowed as deduction. If not, then this would not be allowed as deduction. So if there is a capital gain income and STT is allowed in PGBP in the P&L account given to you in question, what you will do? You will disallow it. Why? Because the income is capital gain of nature. Clear? So from this, we can discuss a branch of concept which we were trying to avoid for the 2 class, which is speculation business, before moving ahead. So up till now, students, have discussed all the deductions which comes under the other deduction section of section 36. All those deductions have been discussed, which is relevant to your level. So before moving ahead to another deduction section, which is the last deduction section, section 37, since we are talking about trading, let's discuss speculation business. थोड़ा सा मार्केट का नॉलेज एनहांस करते हैं, राइट? अभी just 5 minutes पहले I told you trading of shares, if done with an intent of business purpose and is done regularly, that becomes PGBP. That becomes PGBP. That is a PGBP income taxable under head PGBP, not a capital gain income, not a capital gain income, repeating again and again. So now, SAE, there is another type of business called speculative business. Speculative business क्या होता है? Where there is no actual delivery, whereas there is no actual delivery of stock or shares. It's just based on speculation. That means if you make a trade by purchase, you cancel it off by making a sale of it. There is no actual delivery happening. I do not have to give you 1,000 liters of crude oil to make it to make it sound as an actual delivery. People who trade in golds do not make actual gold payments or give. If I purchase gold, I do not get gold when I say I purchase gold on a commodity market. Okay, that is called speculation business. That is called speculation business, where you work on speculations. Okay, इसका price बढ़ने वाला है, so let's purchase it. इसका price गिरने वाला है, so let's sell it. Let's make a short position. Let's make a long position. Okay. So speculation transactions, the transaction of purchase or sale of commodity, including stocks and shares settled otherwise than by actual delivery or actual transfer of the commodity or scrip. But here, so if any transaction is coming into, or any nature of transaction is coming into speculative business, it would be taxable under PGBP income only, but the business would be called speculative business, and it has to be treated different from other business. Why so? Because speculative business ki losses ka there is another set of rule. Just like we talked about specified businesses and all stuff, that is treated here. But speculative business is treated separately from your other businesses. It is part of PGBP income, but it is a separate business. Okay. The speculative business is a separate business. Everything would happen in the same manner which we discussed, but it is treated as a separate business. But these 5 things which you can see on your screen are not speculative business. These are exception to speculative business. These are business. इससे कोई income आएगा would be treated as business, but it would not be treated as speculative business. What? Hedging contract in respect of raw material or merchandise. So generally what happens, students, in real life, if you're trading into frequent raw materials and you get to know that due to so and so situation, maybe the raw material price may increase. So you hedge your contract. That means you fix a contract that I will purchase this raw material at this much price, no matter what the raw material price actually stands in future. This is a hedging contract. So if you're entering into a hedging contract, that is not a speculation business. If you're entering into a hedging contract in relation to raw material or in relation to shares, is not a speculation business. There is forward contract, then there is derivatives trading. Derivatives, if you trade options, if you trade, that is not a speculation business. If you trade in commodity derivatives, that is also not speculation business. For your level, you do not have to dig deep into the understanding of speculation business. Just remember, speculation business is a separate business from other lines of business. Speculation business is a separate business from other lines of business. It is a part of PGBP income, but it is separate and it has to be treated separately. That's it. Okay. Next, we move to our last segment of deductions, which is general deductions. From 30 to 37, now we are here where we are talking about all the admissible deduction, and this is general. अब general deductions में क्या आएगा? Students think and sit and think that we cannot have deductions for each type of expense, correct? Because there are so many types of expenses in relation to different types of categories of businesses. So each expense के लिए separate deduction is not possible, right? In fact, if you think कि 36 में what were all there, again, very limited deductions. 35, 32, all of these are specific relation deductions, right? But there are certain expenses which are deductible, right? अब think salary कहाँ deductible होगा? A salary paid to employees under which section up till now, which we have discussed, where it would be deductible? Whether it would be deducted under the section 36? No, because salary ka there is no provision, there is bonus. 35, no, obviously 35 may salary for scientific research, that is separate thing. Kahin or no. So salary is purely for purpose of business. So where it will go? So what income tax did? They made a residuary section, section 37, where all the expenses which are in relation to business exclusively, wholly and exclusively in relation to business would be allowed as deduction. If I correct myself, all the revenue expenses, all the revenue expenditure wholly and exclusively for the purpose of business incurred during the year would be allowed as deduction. So wholly and exclusively revenue expenditure, purpose business, then they would be allowed as deduction under section 37. जिसका कोई section नहीं, उसका section 37 is there to claim. Again, if there is no section, then section 37 can be claimed, provided that should be a legal expenditure. A legal expenditure. You cannot make it any illegal expenditure and say that this is for the purpose of business, let me claim it. You are hiring goons, you are hiring gundas to you're hiring gundas to increase the sale of your business, and you will say, ma'am, this is for the purpose of business, claim the expenditure of hiring gundas. No, legal expenditures, okay. Then we talk about CSR. CSR आप लोगों ने law में पढ़ा होगा, corporate social responsibility. You must have studied in your law chapter, companies law. Every year, if you have certain criteria met, then as a company earning profits, you have to spend certain amount to corporate social responsibilities. That means for general welfare of societies, right? For general welfare of society, you spend an amount which is mandatory as per Companies Act to do. Which is mandatory as per Companies Act to do, that is spent in corporate social responsibilities. Correct. The question comes, that is mandatory as per Companies Act. Will this expenditure which is made on corporate social responsibility or on mandatory corporate social responsibility a deductible expense under section 37? Is this a deductible expense? The answer is no. It is not a deductible expense. And why it is mandatory as per company law? Arey Baba, it is mandatory as per company law, but when it is mandatory, when you have profits, it's like an appropriation of profit which is happening. It is not an expenditure expense, right? So corporate social responsibility pay, write it down. This is explanation. Corporate social responsibility pay, if any expenditure is done, that is not a deductible expenditure. That is not a deductible expenditure. Clear? Next, appropriation ka any item, appropriation of profits ka any item would not be deductible expenditure. Giving dividend is not a deductible expenditure. P&L mein appropriation ke items are what? You are just putting your profits in different segments. But here we're talking about up to the stage of profit, right? So appropriation of profits ka koi bhi item, giving dividend, transferring to reserve, all of these are not taxable expenditure. Clear? Yes. Another thing you have to remember is provisions are never allowed. Provisions are never allowed. Then another thing which you have to remember, audit fees allowed? Yes. if just like I said, any expenditure which is legal should be allowed, which is legal should be allowed. So इसी में ना very important question and very common question which comes is, you see, it's called freebies. Freebies क्या होता है? Something given as free, and this happens a lot in medical line. आप किसी भी clinic में जाओ, you go to any clinic of a doctor, there you will see a pen is of some company, of some X company, calendar is from some X company, clock is coming from some X pharmaceutical company. So you will see lots and lots of sponsored items there in a clinic of a doctor, many a times. Okay, so doctors receiving those items, right? Someone is paying them, someone is giving them as freebies, right? Why are they giving them? To promote their pharmaceutical company. The doctor write the medicine of that pharmacy, right? That is the intent to give. So, किसका खर्चा है, किसका expense है? Whose expense is that? Of the pharmaceutical company who is giving the freebies, right? Who is giving the freebies? These types of freebies are not allowed as expenditure, ma'am. Why? Because I just told you that legal expenditures are only allowed, and giving freebies to doctor is prohibited by the Indian Medical Association itself in under their particular ethics, that give doctors accepting freebies is not legal, because उससे क्या होगा? They will get biased towards a particular company. Instead of writing the true medicine which is applicable, they may not write it. So that's why freebies given to doctors, where the company is giving freebies, cannot claim the expenditure. Okay, then one thing you remember, paying income tax. I am paying income tax. Can I claim the expenditure of it? No. Can I claim the expenditure of it? No. Why? Because again, income tax is paid from the profit. Income tax expenditure nahi milega. Expenditure of income tax would not be allowed. Interest on income tax, again no. Penalty on paid as per income tax, again no. But GST if allowed, GST can be allowed. Yes, if no input credit is taken, then GST would be part of expenditure. Interest on GST, part of expenditure. Penalty, no. So penalty is like what? Penalty is when you have offended a law. Then you make penalty. So any penalty given on offense of a law, any penalty paid on offense of a law is not allowed. Is not allowed. Simple sa baat hai, students. You are offensing a law, you are violating a law, and on the top of it, you have the guts to claim penalty as an expenditure, which is being paid on that offense. So that is not correct. So any penalty paid for an offense or from a breach of law would not be allowed. But any penalty paid for a breach of contract, the parties के बीच में there was some agreement that is supposed by so and so date I do not deliver, then I have to pay penalty. That is a business transaction, business related penalty, that would be allowed. That would be allowed. These are the minute things which you need to take care of, but these would automatically be taken care of if you apply the business background and the business sense to it. Okay? There is no rectification. Think of it from the business and legal point, and then you will see which is allowed and which is not allowed. Any queries? Clear? So that's all about our admissible deductions. Take a moment of admissible deductions. Admissible deductions are those deductions which are allowable from the profits. If impact is already taken, you will not take any impact. If impact is not taken, then you will reduce it. If something is in excess, you will add it back. Excess expenditure claim, add it back. Apply the provisions as per section 30 to 37. CSR expenditure, I will not explain. I can say CSR expenses which you make as per company law is not deductible, because that happens only when you're having profit, and it's like an appropriation of profit. It is not expenditure in relation to business. So that's why it is not allowed as deduction. Okay, Rohini? But what is CSR? When it is applied, go through that for the company law. Perfect. Now we proceed to another very important part, is inadmissibility. Now on section 40, section 40A, the section where it is discussing inadmissible deduction. That means these deductions would not be allowed. These deductions would not be allowed. Abhi tak we were doing it from the point of view of admissibility. These deductions are allowed. Now we'll see these deductions are not allowed. That means they have been treated as expenditure, but they will be added back. They will be added back. They have been treated as expenditure, I'm saying again, but now they will be added back. When will these situations happen? Okay, let's start. For every contribution by employer, the due date for claiming the deduction is the due date of return. For employee contribution received by employer, to not make it taxable, the due date would be the due date of the fund. Okay, okay. So now come to section 40. Section 40 talks about inadmissible deduction. Abhina student, one thing before I proceed, a very general thing. दोनों में what is the difference? Are these the same section? Because I've seen this people doing a mistake off and on. Are these the same section? The answer is no. The answer is no. This is section 40. And this itself is one complete section. Section 40A. Just like 10AA, this is 40A. This or 35DDA, 35D, just like that. This is 40A, and this is 40. This is clause A. So do not make this error of writing this section as 40A1 or something. That would be stupidity. Or this section as 40A3. Okay, very general thing. So this is section 40A, this is section 40 clause A. Okay, remember it. Now we are doing section 40 clause A, subclause 1. Inadmissible deductions, kharcha is allowed. Now, TDS, kya hota, students? What is TDS? TDS is a compliance. It's a compliance on the person making a payment. On the person making the payment to another person, and he needs to ensure that he will deduct some amount. He will deduct some amount and deposit it to income tax authority on behalf of the other person. Now let's take an arrangement between you and me. I am making you a payment. So if the TDS provisions are applicable, I have to make you a payment of 100. So for me, 100 is the expenditure. For you, 100 is the income. This is correct. 100 is the expenditure, 100 is the income for you. I have to make you a payment of 100, and if TDS is applicable, it may happen that I pay you 90 and the remaining 10. And the remaining 10 I'm paying to the government on behalf of you. to the government on behalf of you. Why so? Because income tax authority says it's better, instead of going after you to claim tax on 100 rupees, let's have it beforehand only from the person who is the source. I am the source of that income. I am the source of that income for you, right? So they say let's recover it from the source only. This is what TDS is. Abhi section 40 may will not discuss anything. This is what the concept of TDS is. So instead of going to the person who has earned the income, they put the responsibility on the person who is giving the income or who is the source of the income, that you pay 10 rupees to us instead to him, and we will take care of the taxes. So does that mean my expenditure is 90? No. For me, expenditure is 100. Bas kya hua hai? 10 has gone here, 90 has gone to you. For you, the income is again 100. But what has happened, instead of you paying tax afterwards, 10 has been given at your behalf to the government. Clear? So to ensure that person like me, on whom the TDS is applicable, deducts the TDS, to ensure that they become compliant, to ensure they become responsible, government has put certain checks that if you will not deduct TDS, we will not give you the benefit of expenditure. If you will not deduct TDS, we will not give you the benefit of expenditure. This is the theory behind the concept. Okay, why a checkpoint has given, so that I can become compliant. मुझे expenditure का deduction नहीं मिलेगा, so it would be a loss for me, right? So to become compliant, so that I deduct TDS, they say that expenditure ka deduction would only be allowed when you will deduct the TDS, where it was deductible, okay, and pay to us once you have deducted. Okay. For me, the cash flow is of 100 only, but 90 here, 10 here. For you, the income is 100 only, but 90 you have received in your pocket, 10 has been given to the government on your behalf, which otherwise you would have paid on 100 rupees. Okay. Clear? So now come to the concept of section 40A subsection 1. If a tax has not been deducted, which is TDS, has not been deducted, or after deduction has not been paid on or before filing of return, on any interest, royalty, fees for technical services or other sum chargeable under the Act, which is payable outside India or in India to a non-resident, not being a company, or to a foreign company, then such amount of interest, royalty, FTS, etc. would be disallowed. Ma'am, explain it. Yes. Think yourself as a business. 40AI or 40A1, whatever you want to say, 40 clause A, subclause 1, any expenditure. So I had to pay royalty of rupees 10,000 to Mr. John, who is a foreign resident, who is a non-resident. So they say, if on this 10,000, this is my expenditure. This is my expenditure. This 10,000 is expenditure, right? Would be disallowed. Would be disallowed. That means that this would be added back if on this 10,000 the TDS which was deducted is not deducted. The TDS which was deductible is not deducted. That means no TDS deducted. I had to deduct 1,000 and I had to pay John only 9,000, but I gave 10,000 in full to John. It does not matter if I paid 10,000 in full to John or not. I did not deduct it. Okay? Or after deducting, I did not pay to the government. Not pay to the government on or before due date of return filing. Income tax return filing. That means मैंने 10,000 John से तो काट लिया. I deducted 1,000 from John. I paid him 9,000 only, but I did not pay this 1,000 to the government. In both these scenarios, this 10,000, which is expenditure which I claim, would be disallowed. Would be disallowed. That means that would be added back to my profits. My profits would increase. My taxability income would increase. Okay. So when the TDS has to be deducted and it is not deducted, which is scenario 1 where I paid full 10,000 to John, or it had to be deducted and I deducted it, but I did not pay to the government. I did not pay to the government on or before due date of return filing. Then that is, I deducted 1,000, I paid John 9,000, but this 1,000 I did not pay. Then in both the scenarios, this 10,000 would become disallowed. Clear hua? Akka? This is thoda sa technical because you people do not have the concept of TDS in mind. That's why once this TDS concept is clear now, so this is like makhan. This is like a butter for you people. Clear hua, yes or no? TDS of concept is applicable to various situations, resident, non-resident. That is, we are not discussing. We are just discussing when TDS is applicable, whether you have deducted it or not, or if deducted, paid it or not. Okay, Vrinda? Correct. The expenditure amount would be the disallowance, not the TDS amount. Expenditure pura ka pura would be disallowed in such per situation. Okay, chalo, perfect. Next example, next disallowance पे आते हैं, and then we connect both of them. (40A) 40A or 40 clause A sub clause 1 was for payment to non-residents. This clause is for payment made to resident. So if, again, back to my example, I am me or you, whatever you want to say, and now I have to pay this to Mr. J. I have to pay 10,000 to Mr. J. Same situation. Deducted, not deducted, or deducted, not paid to the government. So 10,000, I did not deduct. I paid pura 10,000 to Mr. J, and here I paid 9,000 to J, but 1,000 I did not pay to the government on or before the due date of return filing. Then in this case, where a payment has to be made to a resident, but the TDS is not deducted or deducted but not deposited, in that case, there's a disallowance of not 100% of expenditure, but only 30% of the expenditure. Only 30% of the expenditure is disallowed. Only 30% of the expenditure is disallowed. Why? So residents के case में they have said कि maximum taxability comes to 30%. So let's only disallow up to 30%. So here the disallowance in both the scenarios would be how much? Only 3,000. Only 3,000. Clear? So what is the difference between the first clause which we discussed and this? Is that here full 100% deduction expenditure get disallowed when you're making a payment to a non-resident or to a foreign entity outside India. Here only 30% is disallowed of the expenditure when you're making a payment to a resident. Only this is the difference. Okay. Now, ma'am, what if due date of return filing is 31st? Now this is common in both. Due date of return filing was 31st July. I did not deposit the TDS on by 31st of July, but I deposited the TDS on 30th August. What will happen now? Let's see that. This is for previous year 21-22. And this I deposited on 31st August 2022. Now what will happen? So if in both the cases, either the TDS is deducted or the TDS is deposited later, which is after the due date of returns filing, then you will be allowed a deduction in the year when the TDS has been paid to the government. That means in previous year 21-22, in this case, 3,000 would be disallowed. But once I pay it to the government, once I pay this 1,000 to the government, then this 3,000 would be allowed. That means 3,000 would be reduced from the profit of next financial year, which is financial year 22-23. So meaning thereby, if the disallowance has happened, this is one thing. But if in the next year or whenever you pay the amount due to the government as TDS, whenever you pay the amount due to the government as TDS, then in that case you get the expenditure as allowance. In that year, you get the expenditure as allowance. So previous year, if I take John's example, I did not deduct any TDS, or I deducted the TDS, but I did not pay to the central government by 31st July. But now I paid it on 31st of October. I gave it to the central government. Maybe there was some fund shortage. I used the fund somewhere else, whatever the reason is. I paid it to the central government on 31st October 2022. Now the impact will come in 2 years. In first year, which is previous year 21-22, there would be a disallowance of 10,000 pura, which we discussed and which you all understood and you agreed that you understood. Okay. But in previous year 22-23, where I've actually paid it to the government, where I've actually paid the TDS to the government, I will claim expenditure of this disallowance. Pehle saal, it was added back to my profits. Now 22-23, I will simply claim 10,000 as expenditure, even if it is not related to the year. It was related to the previous year, no problem. Previous year, I added it back, but now I have fulfilled my responsibility. I am rightfully allowed to claim this expenditure. I'm rightfully allowed to claim this as expenditure because I have become a good bacha and I've paid it to the government. Similarly, in this case of Jay, the amount which was disallowed would be claimed as expenditure in 22-23. Okay. I did not understand your query, Naveen Chandra. Then what about the details that is required to be deducted? Required, first you will deduct it, then only you will pay it. No. Any of the situation will happen. Ultimately, the cycle ends when you pay it to the government. Namrata, I'll answer this query, but first, any doubt, abhi tak? This has to be cleared in all senses because a question may come of a previous year TDS liability paid during the year. Then without fail, you have to claim the deduction, right? A question may come for this year TDS liability not deducted, then you will not claim as expenditure. You will add it back if claimed as expenditure. Okay. So you have to be very mindful of what year it is talking about, what has happened, what has not happened, and then see whether it's admissible, it is not admissible. Okay. No one will tell deduct it or reduce it. You have to apply the grade. If paid outside India to a resident is not there. Why? Accrue, if paid outside India to a resident would come here. If paid outside India to a non-resident or to a foreign company would come here. Clear हुआ? अब इसमें ना there is one more leg to both these sections. Just last thing, they say, okay, why take it to the next year? Why take it to the next year? What happened? let's take an example of John. I know कि मैंने 10,000 पूरा pay कर दिया. Let's take an example of Mr. John. I know that I have given 10,000 full to Mr. John. Now what will happen? How will I claim the expenditure? I have already paid 10,000 full to John. Now what will happen? मेरा तो unnecessary disallowance हो जाएगा, right? Of full 10,000, correct? Now this is again applicable to both the cases. Please listen carefully. Unnecessary disallowance would happen. I have already paid 10,000 to John. Now what can happen? One is I take 1,000 from John, pay my TDS liability, be a compliant person. Another thing which the income tax says that if the payee, who is the payee? Mr. John is the payee. I am the payer. Mr. John is the payee. If the payee files his return of income, shows this as income, pay taxes, files the return of income in time, and your CA says that everything is in place, then we will not make any disallowance. Because ultimately, what government wants? Government wants tax on this 10,000. To the idea to imply the whole concept of TDS was to get tax on this, right? Was to get tax on this 10,000. That's why they routed through you. कि चलो, instead of going to John, you become responsible to claim expenditure, deduct the TDS, right? This was whole fund. Ultimately, government को क्या चाहिए? This 10,000 पे tax. So if John says that I have filed my return of income, I have showed this 10,000, I have paid the tax on this also, and your CA put a stamp to it that this has happened, then there would be no disallowance. Because ultimately government has received what it wanted to. Ultimately government has received what it wanted to. So if this has happened and the CA says, okay, everything is in place, everything has been done, government को अपना tax मिल गया है, government has received the tax, then there would be no disallowance. Then there would be no disallowance. Clear? So this happens in both the cases. Okay, so ultimately if the government gets, okay, we have received everything, then why should we disallow it? Unnecessary, no disallowance. Next leg in section 40A, clause 2B, inadmissible deduction. Any state government, if any state government undertaking is making a payment to a state government, if any state government undertaking is making a payment to state government by whatever nature, इसमें TDS नहीं है, by whatever nature of be it royalty, license fee, service fee, privilege fee, etc., it would not be allowed. TDS हो ना हो, state government undertaking making any payment to state government in these nature, whether directly or indirectly, would not be allowed. Because the income tax says the government undertaking can claim higher expenditure by showing that I have paid so and so amount of state government. Because state government के हाथ में nothing is taxable, right? So they can claim any amount of expense as any X amount as expenditure. So that's why they say if you pay anything to state government, you will not be allowed as a deduction. Clear. Next is something in relation to back to TDS, section 40A, clause 3. Mark it as important. Why mark it as important? Because it is thoda sa different from what we discussed. Here, I have to pay salary. The expenditure is in relation to salary to a non-resident. To a non-resident or a person outside India, the salary is payable. Let's take this person now as Joey. Okay. So I have to pay salary to Mr. Joey, non-resident. I have to deduct TDS. I have to deduct TDS. The situation is same. TDS not deducted or deducted but not deposited. If TDS is not deducted or deducted but not deposited within the due time, not before return filing. In other two, we had the time to deposit it to the central government within the return filing period, within the due date of return filing. But here we have to pay it within the due time, and due time is 7th of next month or 30th of the 30th April in case of March payments. So within the due time, if I do not pay, even if I am delayed by a single day within the due time of that TDS, due time is 7th of next month, then there would be no deduction. Even if I paid it before return filing, not important. Non-resident का salary के case में there cannot be a single movement delay from the due date. If it has happened, no deduction would be allowed. No deduction would be allowed. So if I have to pay salary of 1 lakh and I have not deducted TDS, so this 1 lakh pura ka pura would be disallowed, would be added back, would be disallowed. So this 1 lakh pura would be disallowed. The catch here is within the due time of that TDS has to be paid to the central government. If not paid, pura ka pura would be disallowed. This comes only in, this section is only for salary payment to a non-resident or to a person, or when a salary is payable outside India. Only in this situation, this thing would be considered. So, ma'am, here if we paid later, will we get the deduction later? No. No. Here we had a common thing, na, if you paid after return filing period, then in next year you will claim it. No. Here, there is no such exception. Dena hai to dena hai, that's it. Within time you have to pay it, otherwise no deduction. Okay? This is what the difference is between 40A, clause 1, clause 2 and clause 3. Clause 1, clause 1 and clause 3. Last is for payment made to provident funds. Fourth part, I think it is it there or not? Just one second. Payment made to provident fund नहीं है. One, this is when provident fund is making the payment back to the employee. The lump sum, which we discussed, lump sum is taxable. Remember, lump sum of RPF was taxable if withdrawn before 5 years. So the lump sum is taxable. The employee has to ensure that उसमें necessary TDS has been deducted. If not, then it would become an inadmissible expense. Again, not very important for your level. Last, again not important, but we'll discuss any tax actually paid by employer referred to in section 10 CC, section 10 clause 10 CC, which is tax on non-monetary salary. Remember tax on perquisites? I told you that sometimes tax on perquisite is claimed by not claimed, is borne by the employer. Tax has to be borne by the employee. Listen carefully. 10,000 the payment is to be done. Just me say 7,000 is not monetary, 3,000 is non-monetary. Okay. So generally what happens is 10,000 is account में कितना जाएगा 7,000, right? Account में salary payment in account actually would go 7,000 and 3,000 is a perquisite. This is a facility, right? Correct. So what happens generally? There becomes generally for the employees who comes on secondment, there becomes an agreement between the people that I will not bear tax on this facility because I have come from abroad. In any way, you have to provide me lots of facility. You have to provide me hotel. You have to provide me car, and unnecessary, I am not bearing tax on it, right? Because hotel service perquisites, car perquisites are taxable in the hands of employee. So those employees who come from outside India, this is a practical situation. They say that I will not pay unnecessary tax on this. Okay, what I'm receiving in hand, I understand as per the Indian tax law, I have to pay it, fine. But I will not pay tax on it. But government ko to this 10,000 full pay tax chahiye, right? So the employer say, okay, you do not pay, I will bear it. I will bear it. I will bear it. I will take care of it. From you, we will only deduct tax on this and not on this. Okay. So instead of deducting 100 rupees full, they are only deducting 70 rupees. Just for example, but they are paying to the government full 100 rupees. So 30 वो कहाँ से pay कर रहे हैं? From their own pocket, right? So remember any expense borne by the employer on behalf of employee becomes the perquisites of the employee. So along with this 3,000, now this 30 rupees which I am bearing is also a perquisite for this person. It's also a perquisite for the employee who has come on in this economy. So this 30 is a perquisite for him, which is a salary for him. Uska salary income, and this 30 is a kharcha for me, right? This is an expense for me. Here, think yourself as employer, a person who's conducting business. Here, think yourself as an employee whose salary would be taxable. 7 plus 3,000 would be taxable, but this 30 which I had to bear, as in the person who was coming from outside India to work, the employee had to bear, this 30 is now borne by the employer. So 30 ka additional kharcha is of employer and 30 ka additional income is of the employee. Correct? Yes. But as per section 10 cc, this 30 is allowed as exemption in the hands of employer. This 30 is allowed as exemption in hands of employee. That means I will add 30, but it would be minus 30 exempt under section 10 cc. Clear? Because ultimately this is not getting taxable in the hands of employer. So the income tax says when we are not making this taxable in the hands of employee. So this 30 which you claimed as expenditure would also be not taxable in your hand. Would also not be deductible in your hand. Income we are not taxing from other person, then why we should give the benefit of expense to you? जिसका income है, we are not taxing it from him. We are making it exempt. So similarly, this expense, why should we give a benefit to you? So this would be a non-admissible expense. As simple as that. Just matching the concept. 30 not your income, fine. 30 not the income of employee, fine. We understood because it is exempt. 30 again not my expenditure because we are not making this taxable in the hands of person. So why you should get a benefit of expenditure on it? Clear? So with this, we cover our inadmissibility in section 40, clause A. Next, we have 40 clause B, which is very, very, very important. But I will give you some break of 10 minutes and we'll connect again by 8:40, 8:45. Meanwhile, please have something, fresh up yourself. And if you have time, solve the queries which are there in 40A1. And if you have any query, please drop it in the query session. So let's meet it after 10 minutes. So welcome back everyone. We are discussing inadmissible reduction. So we have done up to section 40 clause A. Let me go to some queries which we have. Okay. Jameen says, how could John file the return when he's out of the country? So what? Non-residents are required to file return of income. They employ someone, anything. You cannot say that I do not know the laws of a particular place. So John will file the return by some CA which he has in relation to, or maybe his company, or maybe last the person is making the payment. That is immaterial. What if salary to the government employees without TDS? Salary to government employees, government would not make such a blunder where they're paying it to its employee and to not by deducting the TDS. Yes, they deduct TDS and then they pay it to themselves through challans. This happens, okay? Namrata, what is the due date under section 40A clause 3? The due date for all the TDS related payments, if deductible, if it has become deductible, then it has to be paid by 7th of the next month. For March, it is 30th April. You will do this in your TDS chapter, do not worry. But I think abhi tak sara concept is clear. Sure. Good. Now we proceed forward. To another important concept, section 40 clause B. Section 40 clause B talks about inadmissible deduction when it comes to LLP or form. LLP or forms. Baba, one thing you have, salary paid to any employee is taxable, right? Salary paid to any employee is taxable in the hands of employee and is deductible in the hands of employer under section 37, correct? But what about salary paid to partners? What about salary to partners? Firm is paying salary to the partners, or firm or LLP, both included. What about them? Partners के लिए I told you that salary is taxable as PGBP income. Day one पे we discussed it. No employer-employee relationship. So what they're earning, that is a PGBP income. Correct. Firm and LLP के लिए it could be an expense. This is also correct. But since they are like more or less operated by same person, there can be unreasonability that maybe to make the profits, because firm ka profits are taxed at 30%. And partners, if individuals, are taxed as per slab rates. So they can claim jitna marzi deduction they want in the form of salary, in firm's books profit, in firm's profit, and no matter what partners के account में taxable हो जाएगा, that is immaterial, but they can claim it to get the benefit of tax. So what section 40B has done is, 40B along with certain conditions have put certain restriction कि beyond this salary would not be allowed. Beyond a particular limit, we'll see how that limit is to be calculated. Salary would not be allowed. Salary would not be allowed. Okay. So beyond a particular limit, salary would not be allowed. So also, not only salary is paid to the partners, very common thing which is another paid is salary can be any name, remuneration, wages, whatever you want to say. Another important thing which is paid to them is interest. Interest. Interest on what? Interest on their capital, interest on loan, anything. Interest is paid to the partners. That is also deductible expenditure for firm and a taxable income for the partners under PGBP. Deductible expenditure for firm, taxable income for partners, PGBP. That is also, we have a governing limit to it. For this also, we have a governing limit. Isse zyada interest you cannot pay. Why the restrictions have been put? You got the reason for that, because they can claim jitna marzi deduction they want, because to have this tax benefit, Because partners के हाथ में तो they will get slapped. अगर even if it is getting treated income here, there would be a certain tax का benefit they can avail. So to avoid such situations, the income tax has put restrictions. इतना clear हुआ? We'll see what are the restrictions. We'll see how we have to calculate it. So in case of firm and LLP, payment in the nature of salary, bonus, commission, remuneration by whatever name called will be referred as remuneration. But what would be the disallowance? Any amount paid to not working partner. So the partners who are sleeping partner, उनके लिए any amount which is paid would be disallowed. Any amount paid would be disallowed. So even if that amount is paid as per all the other situations in mind, but it is to a sleeping partner, it would not be allowed. Okay, salary to sleeping partner, not allowed. No limit, clearly not allowed. Secondly, salary should be as per partnership deed. It should be as per the income tax provisions also, but prior to it, it should be as per partnership deed. There should be a partnership deed, and whatever there is in partnership deed, uske according the salary should be given. You cannot give salary by whatever comes in your mind. No, salary should be clearly as per partnership deed. Salary and interest both. If interest rate is we'll discuss salary and interest, both should be mentioned that we are giving this much amount as per partnership deed. But it cannot be for a prior period to partnership deed. Now, what do you mean by that? So, salary should be as per partnership deed का मतलब है कि suppose partnership deed got registered on 1st August 2021. Right? But in this partnership deed, they have written that salary would be paid for the whole year from April 21 at 10,000 per month. Partnership deed got registered when 1st August 2021. So any payment made prior to the registration of partnership deed would be disallowed. Even if the partnership deed mentions so, then also it would be disallowed. So April ka salary, May ka salary, June salary, July salary. $40,000 per partner. $40,000 per month. Sorry, 40,000 per partner would be disallowed. Again, partnership deed से पहले का any amount paid, even if partnership deed says कि we will pay it. No, partnership deed की registration होने से any before that any amount which is paid would not be allowed. Would not be allowed. This is the basic thing. Now, what the income tax puts the restriction on? Income tax may, along with partnership deed, they have said that you will not pay interest at a rate of more than 12%. Interest on capital and loan both cannot be more than 12%. This is income tax the ceiling limit. So supposedly, first we will check whether interest on partnership deed, interest on capital is allowed in partnership deed, yes or no. Chalo, yes. Now, what is the rate as per partnership deed? If it is 10%, fine. 10% is the rate as per partnership deed, koi problem nahi. 10% ka whatever 10% of whatever amount is outstanding, interest can be claimed. Second, if as per partnership deed, the rate is 15%. First, you have to go by partnership deed. Partnership deed, it is written interest would be given, correct. Chalo, fine, we will give the interest. That means admissibility can happen. But partnership deed, rate is written 15%. Partnership deed rate is written 15%, and here it is 12%. So 3% interest would be disallowed. 3% interest would be disallowed. So, example, if the interest paid during the year, is 1,20,000. I'm not saying interest is paid on 1,20,000. So, what is the what interest paid during the year is 1,20,000? Sorry, interest paid during the year is okay. Sorry. Interest paid during the year as per partnership deed is 1,50,000. How much is the interest allowable? How much is the interest allowable? 1,50,000. So 15%. We need to calculate it at 12%. So 1,15,000 divided by 15% into 12% unitary method, you will get 1,20,000. So 1,20,000 is the allowable interest. 30,000 is disallowed. Clear? Yes. Here, abhi khatam nahi hua. What is the taxability now in the hands of the partner? Partner ke hand mein, what would be the taxable amount? The first thing, partner ke hand mein, Mr. X, PGBP income mein, he will show interest from partnership firm. How much would be the taxable amount? Will it be 150? Will it be 120? Will it be 30? Students, it would be 120. Why, ma'am? The amount, make it clear, and this is the basic concept. The amount which is getting deductible in the hand of the other person would only be taxable in the hand of the other. In the meaning thereby, if I am taking the benefit of only 120 as a firm, then why you should pay tax on 150? 30,000 pe to partnership firm is paying the tax already. 30,000 partnership firm is paying the tax already. Why? Because that is disallowed. Uspe I have to pay the tax. Correct? Uspe I have to pay the tax. So 30,000 pe tax government ke paas already they have gotten, right? On what amount they have not gotten the tax is the expenditure which you claim, which is 120. Think yourself as the firm. It's the expenditure which you claim. So 120 pe government ke paas tax nahi aaya. So on that 120, they will claim the tax from Mr. X, who's a partner in XYZ partnership firm. Here, so all the amount which becomes admissible here would be the amount which is taxable in the hands of Mr. X. Remember this concept, students tend to write 150 here or they tend to write 30 here, but actually it is 120 and the concept behind it is also clear. Now we come to the salary portion. Salary again allowed to working partner, allowed to working partner, allowed as per partnership deed, but not prior to partnership deed. This we all know, right? So now is the salary. They've written that salary, there are two partners, X and Y. 1 second, students. One second, please. Sorry. So back to the concept. So there are two partners, X and Y. The two partners, X and Y, again, the firm has paid salary to them at 3,75,000 each per annum. Okay? Total 7,50,000. Now, this is as per partnership deed. This is within the partnership deed period. Everything is in fine. this amount would be allowable subject to a condition which is, जैसे यहाँ पे condition is 12%, salary का condition is that it cannot exceed on the what a percentage of book profit. A percentage of book profit. So book profit is certain percentage is defined, and it cannot be more than that. Now, what is that percentage? So the percentage is on the first 50 lakhs of the on the first 50 lakhs, 1,50,000 of the first 1,50,000. The salary allowable would be either, sorry, on the first 3 lakhs. Sorry. On the first 3 lakhs, salary would be allowable would be either 90% of book profit or 1,50,000, whichever is higher. On the first 3 lakhs of book profit, no, not worry, we do an example. 90% of book profit or 1,50,000, whichever is higher. And on the remaining book profit, 60% of book profit would be salary, and this would be the total salary allowable to all the partners in aggregate. So, suppose my book profit is 7,50,000, or as per, let's take as per the question only, my book profit is 10 lakh. So on the first 3 lakh, 90% of book profit or 1,50,000. On the first 3 lakhs of book profit, 90%, which is 2,70,000, or 150, whichever is higher. Obviously, 2,70,000 is higher, so 270 is to be used. And on the remaining book profit, 60%. Remaining book profit is 7 lakhs. 7 lakh to 60% is 4,20,000. So 420 plus 270 is 690. So they say the maximum salary which you can pay to all the partners in total is 690. It's 690 as per the income tax. But what you have paid is 7,50,000. What you have paid is 7,50,000. So in दोनों का difference, which is your 60,000, would become disallowed as per section 40D. So simple है. Book first you have to see obviously if it is as per partnership deed or not. Then you have to see if it is within the partnership deed period or not. Then you have to see the income tax limits. Then you have to compare the income tax limits and the actual salary. Whichever is lower would be allowed as deduction. If this would have been 6 lakh, then 6 lakh would be the deduction. There would have been no reversal. Full 6 lakh would have been allowed as deduction. But since the maximum salary which you can pay as per income tax provision is 690, you cannot go beyond it. And how this 690 is calculated? It is calculated basis book profit. Book profit में first 3 lakhs में 90%, remaining में 60%. Total would be the admissible salary. So if my book profit is only 2 lakh, for example, it is not more than that. My book profit is only 2 lakhs. So 2 lakh ka 90% is 180 or 150, which is lower. Obviously, 180 is lower. So 180 would be the max. 180 is the higher, whichever is higher. So 180 would be the allowable salary. If my book profit is 1 lakh only, then what would be the allowable salary? 1,50,000 tak it is allowable. 90% of book profit or 1,50,000, whichever is higher. And similarly, just like interest, whatever gets tax deductible here will only become taxable there. So 690 is only deductible. So 690 would be taxable in the hands of X and Y in equal proportion, not 7,50,000. Clear हुआ? Shreya Dubey, is it clear? %, or the interest as per partnership need, whichever is lower, yes, you can say that. Whatever gets allowed here only becomes taxable in the hands of the partner, because allowed part where the firm has not paid the tax. Simple. They have paid the tax part only on the excess amount. Allowed to, they have taken the benefit. So that only would be taxable in the hands of the partners. How this 7 lakh came? 10 lakh sorry, 10 lakh I had book profit. On the first 3 lakhs, either 90% or 150. So 90% is 270 or 150, whichever is higher. So 150 ko I ignored. So this is 270, one limit. On the remaining, which is 10 lakhs minus 3 lakhs, 7 lakh ki book profit pay 60%, which is 60%, which is 420. So the total salary allowed would be this and this. So 270 plus 420, total 690. Clear now? But एक चीज no one asked me, which I was thinking of you people to ask, LLP may be same calculations. If only 6 lakh salary is paid, then full 6 lakhs would be allowed, Ganga. Excess you cannot claim. The point is, whatever is paid as per partnership deed or income tax. Income tax ने बस maximum limit लगा दी, इससे beyond you cannot go. If you are paying it less than that, we have no problem. This, correct. This is for all partners, not 690 for Mr. X and 690 for Y. All the partners informed. If they are 3, 4, 5, maximum salary which they can pay is this, on which the firm can claim the deduction is this. But one thing I was waiting to ask is, now what is book profit? How is that to be calculated? Whether that would be given in the question or whether we have to calculate it. So no one asked about this. So book profit. क्या है? What is this book profit? What is this book profit? Is this my book profit which is as per Companies Act? Is this my book profit as per the deductions which we are calculating? What is a book profit? So till now, whatever PGBP made deductions which we made and adjustment which we made, after that, whatever PGBP ka in profit is coming in my book profit, but obviously before allowing this remuneration, whatever PGBP mein my profit is coming, after taking 32 ka deduction, after taking 36 ka deduction, 37 ka deduction, after disallowing 40A, whatever taxable PGBP income is coming just before this remuneration, would be my book profit. At your level, I may say that at least 50-60% of question comes, book profit is clearly mentioned. But if it's a comprehensive question of 15 marks or 16 marks or 14 marks, usme first you will calculate after all adjustments the profit, and just before allowing this 690 in this case, whatever book profit is coming, that you have to consider for calculation of this 90% and 60%. Obviously, to calculate this, you need book profit. The book profit is just before taking the impact of this deductible portion of both salary and interest, because 40 BK adjustment se pehle whatever book profit is coming, uska impact, whatever book profit is coming, that has to be considered. One thing students remember, if in the question salary paid to partner is already reduced from the profit which is given to you, matlab the profit is 7 lakh, which is coming after reducing this 7,50,000. So you will add this back. So 14,50,000 would be my book profit to be considered. I am saying that take the book profit just before calculating this allowable amount. But this 7,50,000 is definitely disallowed, right? Or would definitely impact the allowability. It may happen 7,50,000 pura ka pura allowable ho jaye. It may happen 7,50,000 in full becomes allowable. But first you will add it back to calculate the book profit. So in short, profit of PGBP before salary, profit of PGBP before remuneration would be my book profit to consider the 90% and 60% limit. Okay, Shashank. Book profit as per IT, correct, Siddharth. Let's say you used to calculate manager's remuneration in company act, right? Or accounting standard, let's say something like that. Maybe before we calculated all the profit, similarly like this. Achha, one concept which is very interesting in relation to this only, salary I hope is clear, interest is clear. Now I come back to interest. Very interesting concept. I want everyone on the screen, please. Students, I told you interest on capital plus loan, both. Should not be more than 12%. It may happen you are giving on capital 10% or on loan it is paid 15%. No, total 12% ka limit hai. Okay? So 10% on capital and 12% on loan will be the actual allowed. That is clear? Yes. But you know this, that in partnership firm, non-individuals can also be partners. In partnership firm, non-individuals can also be partners. HUF can be a partner, company can be a partner, LLP can be a partner, AOP can be a partner, anyone can be a partner, right? Correct. Non-individuals can also be a partner. Yes or no? Correct. But to represent these non-individuals, we need one human, right? Partnership people who will sign on behalf of these artificial persons like HUF, another partnership firm, who will sign? There would be some person who would be representing them, right? A person would be representing them. That would become a representative capacity person. Correct? That would be a representative capacity person, right? So this you have to understand, number one. So can I say there's a partnership company called XYZ. XYZ. You can listen carefully. XYZ is a partnership company, I'm saying. Partnership firm XYZ, where X, Y, X, Y, and Z HUF are the three partners. X, Y, and Z HUF are the three partners. X is an individual, Y is an individual, Z HUF. It's a Hindu undivided family. Whose karta is Mr. A? Whose karta is Mr. A? Mr. A is a partner in representative capacity. Partners are कौन? X, Y, and Z HUF. Mr. A is just representing Z HUF. Correct? Because Z HUF cannot sign. Mr. A has to be there to sign the agreement. Got it? Correct. Now, this 12% limit when I'm seeing, I have to see it on partners. I have to see it on partners, right? It may happen that Mr. A has lent me a loan. Mr. A, in his individual capacity, has lent me a loan. Lent me as in lent the partnership firm a loan also. Mr. A has given a loan in an individual capacity to XYZ partnership firm. Now think and tell me whether this interest on loan given to Mr. A, interest on loan given to Mr. A would come under 40B ka limit or not. Interest on loans given to Mr. A, will it come under the limit of 40B? The answer is no. Because Mr. A is not the partner. Mr. A is not the partner. He, in his individual capacity, given me a loan, as in given the firm loan, he, in an individual capacity, has given the loan to the firm. That would not be covered in 40B ka limit. Uske liye we have separate section, which we'll see what. But that would definitely not come under 40B ka limit. But if any interest is paid to Mr. A, if any interest is paid to Mr. A on behalf of ZHUF, would come in the limit. Why? Because ZHUF is the partner. ZHUF is the partner and Mr. A is receiving on behalf of HUF. So that interest, if that is paid to Mr. A, which is on behalf of HUF, that would come under 12% ka limit. That would come under 12% ka limit. So can I conclude? I have to ultimately see that who ultimately is getting that interest. It may be rooted to some person, but that is not important. But ultimately, who is getting that interest? Ultimately, if that interest is going to the partner, it will come to the partner. That will come into my 12% limit. But if ultimately that interest is going to any person who is not a partner, then it will not come in this 12% limit of 40p. Again, I say Mr. A is just representing ZHUA and Mr. A is also given a loan to XYZ. Whatever interest is paid on the loan to Mr. A would not come under 40B limit because Mr. A is not a partner. But whatever given to Mr. A on behalf of ZHUF would become in 40B limit because that is Mr. A is receiving on behalf of HUF. That is ultimately paid to an HUF who is the partner. That would be my eligible limit for that would be seen for my eligible deduction for 12% limit. Clear? So please, if a question like this comes, be very careful that who ultimately is the partner and ultimately who is getting that amount. A partner or a person representing them or a person who is representing them is getting it on his own capacity, not as a capacity of the partner. ठीक है? Clear? Next is again does not come very often, but just a one-line section is 40BA. Section 40BA says 40B is for firms and LLP, 40BA is for AOP and BOIs. AOP firms where we have partners, AOP BOIs where we have members. Okay. Just like forms where we have partners, AOP BOI where we have members. So members this is a clear, there is no limit. There's a clear disallowance of any amount paid to members, whether as interest, remuneration, bonus, commission. No amount would be allowed. Full amount would be disallowed. No amount would be allowed. Full amount would be disallowed. Simple, full stop. Members के केस में anything paid, AOP के केस में anything paid to the members would not be allowed. Simple. Correct. 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 चलो. Next, we come to a section. Section 40 finishes here, where we had 40A and 40B and 40B. Okay. Now we come to section 40A. Section 40A. 40A is expenses of payment not deductible in certain circumstances. Again, these also talks about disallowance. If the circumstance does not meet, then the expense or the payment which is made would become disallowed. If the circumstance does not meet, then the expense of the payment would be disallowed. What is these sections on? So we have majorly three subsections here: 40A2, 40A3, 40A3A, and 9 and 7 are also there, but that is again okay, easy. We have already covered 49. So let's begin. Subsection 2 talks about payment to relatives or associates. Payment to relatives or associate. I think yourself as a business. Okay, you're a businessman. You pay salary. You're a proprietor. You paid salary to your wife. Okay, Mrs. X, and you paid 15 lakhs. Up 15 lakhs on what basis have been given? It may happen that this amount is unreasonable. Just to claim higher deduction, you show that I have paid higher salary. Just to claim higher deduction, you may show that I have paid higher salary. But in actual, if you would have employed some other person, you would have just paid, suppose, 7 lakhs. So this 8 lakhs is unreasonable. And this happens a lot when we talk about payments to relatives or associates, because there you can basically manipulate the P&L account and mold it as per your favor. You claim higher deductions by showing unreasonable payments so that you can pay less amount on taxable income, or your taxable income become less, right? So the AO will disallow any such excess amount which is not reasonable or which is not as per the fair market value. Which is not reasonable, or when we talk about payment for goods, then which is not as per the fair market value. I am showing purchase of which business we should say, purchase of goods in the form of raw material. Okay, raw material, cement ka raw material I have taken, and that I have taken it from my brother who is into the business of cement. So a packet which is there at 100 rupees in the market, I have taken at a 200 value, and I have taken 100 such packets. For me, I am showing purchases of 20,000. But actually, if I go to the market, that packet is, say, suppose available at 150. So this 50 is unreasonable. So this 5,000 would get disallowed. Okay. This is clear. So anything which is excessively paid would be disallowed. Question may, you would be given the amount paid to relatives, you would be given fair market value or the reasonable amount or the amount which is paid to any other person having the same job or doing the same expenditure. Then you will disallow the excess amount under section 48 subsection 2. But the question is that who are those relatives? Who will be considered as relatives is what a legitimate question is. Achha, one more thing, excess hai, is one thing, unreasonable is one thing. Is also, if it is not required also, then also you will disallow. It is not related to business, Baba. You are into business of manufacturing of raw material. Of suppose you are into business of constructing of the floors, and you have shown an expenditure of unnecessary paid to teacher. Right? Is there any relation to it? No. So it should be in relation to business is also important. So I was saying the real question comes that who actually is the relative? Who actually is the relative? Okay. So the relative here, or which we say is specified person, is given in this table. So let's discuss this table. If we are talking about individual, for individual, any relative of the individual, relatives में कौन आएगा? Relative में there would be our spouse, children, brother, sister, linear ascendant and linear descendant would come in relatives. Spouse, brother, sister, linear ascendant, linear descendant would come as relatives. Company forms HUF के लिए who would be relatives? Partner for firm, the partner for firm, directors for company, AOPs में member would be relative. Okay, along with that, your relatives of these partners, these directors or these member. Specified this may be a coming substantial interest में. Other cases में let me just explain you this. Let's first understand it as individual. Individual में relatives and specified person में who would be covered. Relatives में spouse, brother, spouse, children, brother, sister, linear ascendant, linear descendants. ठीक है? These are my relatives. उसके साथ साथ if any person has substantial interest, if this individual has substantial interest in any business, or his relative has substantial interest in any business, this concern would also become a associate or a specified person, and any payment to this concern would also be covered under the purview of section 48(2). Ma'am, please explain. So suppose, first of all, what is substantial interest? When I talk about substantial interest, if we talk about company, it is when you have 20% or more of your voting power. When we talk about other assessments, when you have more than 20% or more as your share of profit. 20% or more as your share of profit. Then you are said to have substantial interest. So if individual Mr. X and then this is Mrs. X. Okay, and Mrs. X has 30% shareholding in ABC Private Limited. Then in that case, ABC Private Limited is also an associate or a specified person for Mr. X. And then if Mr. X makes any payment to ABC Private Limited, one has to review whether it is unreasonable or not as per section 48(2). Here, so a concern in which an individual has substantial interest, or these relatives of the individual has substantial interest. In total also, if it is crossing 20% or more, that concern would also become a specified person. That concern would also become a specified person for this person, and the payment would have to be seen under the scope of 48(2). Similarly, when I talk about a company, when my SSC is a company, director, so company is XYZ Private Limited. There is director X, there is director X, Mr. Y, and Mr. Z. In these, Mr. X, Mr. Y, Mr. Z would be relatives for company. Mr. X, Mr. Y, Mr. Z's relative would be a specified person for company. Also, where Mr. X and their relatives have substantial interest would also be specified persons for company for whom the payment has to be seen for the scope of 40A2. And if two persons have substantial interest in the same company, both of them also becomes the relative. So this both of them also, I should not use the word relative, both of them also becomes the specified person. Clear? Any doubt? Students, family, relatives, all this concept is separate for each section. Just like salary, maybe had family separate when we talked about leave travel concession. You see there is a family different meaning when you talk about deduction. So everywhere the fundas are different. Just like salary meaning is different for each exemption. Similarly, family relatives are different for each section, which you have to remember very carefully. Next, we proceed to another section, another very important section rather, and very common, which is 48.3. Substantial interest, where you have 20% or more of the voting power or 20% or more of the profits, where there is no company. Linear ascendants and descendants, Namrata, means think yourself, you are here in your family tree, whoever is linear ascendant, that is your father, your grandfather, your great grandfather are descendants. Ascendants would be your child, your grandchild, your great grandchild. So Sida and upper, like that. At your stage, specified person would not come so complex, but substantial interest, just we get this case of X that come and at your stage, this Mr. X, for example, maximum. This example. Okay. Now we talk about a very important section. Next 7 minutes we target finishing it, which is 40A C and 48A. They say that any expense or payment made to a person, to a single person in a single day cannot be more than 10,000 in any mode other than account paid check, account paid bank draft, account paid check, account paid bank draft, electronic clearing system, or the prescribed electronic modes. What are the prescribed electronic modes? Like your Beam, UPI, your UPIs, Beam UPI, credit card, debit cards. All of these are your net banking. All of these are your prescribed electronic modes. So apart from that, you cannot make a person, you cannot make a payment to a person for a value of more than 10,000. More than 10,000, up to 10,000 allowed, more than 10,000 would not be allowed. Then if such things have happened, then there would be no deduction in respect of such expenditure. Example, if I pay my electricity bill of 15,000 in cash, the electricity department को 15,000 in cash I paid, this would not be allowed. So 15,000 electricity bill would be disallowed. If I purchase raw material from Sham of for rupees 30,000 and the payment, all of them are done in single day, then this 30,000 would be disallowed if paid in cash. If I took raw material from Sham again the other day, for 30,000, out of which 11,000 was paid in cash, 19,000 was paid by check, then 11,000 would be disallowed. Then 11,000 would be disallowed. Okay, single person, single day. Any payment or any expenditure cannot exceed 10,000. Good problem? No. This limit of 10,000 would be set to be 35,000 if you're making a payment to transporter. If you're making a payment to transporter and that is up to 35,000, then there would be no impact of disallowance, because up to 35,000 is allowed in case of transporter to a single person, single day. Now you will ask, now if I purchase raw material from three different parties, X, Y, and Z, and to them I paid 8,000, 9,000, and 7,000. Total cash payment in a single day for me has this crossed 24,000. Will this be a disallowance? No, because to each person I have paid cash in a single day, but to each person the limit is less than 10,000. Okay? This limit would be 35,000 when we are talking about transporters, payment to transporters. Point out? No. Perfect. Then I hope so. Then there are certain exceptions. But before moving towards exception, one very common thing. Think and tell me. I am making the books on accrual basis. In financial year 2021, I made that payment, purchase of raw material, 45,000. ठीक है, accrue में ये खड़ा हो गया, and Mr. Z now is my creditor. I am talking about financial year 2021. I am making the books on accrual basis. March में I made this purchase. ठीक है, purchase of raw material 45,000 from Mr. Z, creditor Mr. Z. Now, when I'm making the taxable profits for the financial year 2021, this 45,000 would have been allowed because this is a payment in relation to business. Correct? Yes, agreed. And creditor is standing. Now, what happened in financial year 21-22, when I made payment to Mr. Z, I paid this full 45,000 as cash. Full 45,000 as cash. I paid this full 45,000 as cash. Now what will happen? The expenditure is of a previous year in which I have already claimed a deduction. Expenditure is of a preceding previous year for which I have already claimed a deduction. But now when I'm making the payment, I've paid the full 45,000 in cash. What will happen? The expenditure is not in relation to this period, and the deduction is in relation to expenditure or payment not deductible. So what will happen? This 45,000 Baba would become disallowed, and would be added in the profits. Of financial year 21-22. That means 45,000 say you will increase your profits. And this is governed by my section 40A subsection 3. Okay, so 40A3 talks about if the expense has already been claimed in an earlier year and the payment is now being made in the current previous year and that is crossing the 10,000 wala limit, then that amount would be disallowed. disallowed. More than 10,000 in disallow hoga. Full amount would be disallowed. Excess would not be disallowed. Full amount would be disallowed. Full amount which is paid in cash would be disallowed. Ashish, I request to please ask in relation to the topics covered. If cash payment is 10,000, 20,000 is check payment, it would be allowed. Namrata, I hope your question is answered. On daily basis to a single person. Correct part. Siddharth, see, I am talking about why I'm using the cash mode. What are the allowable modes for section 48(3)? Allowable mode matlab if you make a payment of any amount in modes like account pay check, account pay bank draft, account pay check, account pay bank draft, electronic clearing system, or prescribed electronic modes like RTGS, NEFTs, Bheem UPI payments, IMPS. These are prescribed electronic modes. Then 10,000 ka limit would not be there. But apart from these modes, if you're making a payment like in which is like cash or bearer check, in that case, this limit would be this section 48(3) would be triggered. Okay. Auditors, Puja, auditors are there to sit and see whether the cash payment is done or not. Obviously, the books can be fabricated. That is a different story altogether. But what the Act says is this. So that is it clear? Single person, single day. If I am making a payment to raw material to Mr. X, 15,000 on day 1 and 20, if I am making a payment, let's take an example here. If I am making a payment to Mr. X, 5,000 on day 1, 7,000 on day 2, and 9,000 in day 3. X को ही payment जा रहा है, but it is going in cash. But in a single day, it is not crossing. In a single day, it is not crossing 10,000. No amount would be disallowed. Similarly, single day, I am making to 3 different persons. No amount would be disallowed. This concept 48(3) talks about where you have already claimed an expenditure in the preceding year on accrual basis. And now when you're making the actual payment and you have violated section 48(3), then it would be disallowed under section 48(3)(a) and it would be added in the income of this section year. This would be added in the income for financial year 21-22. Clear? Kandik, Sandeep, Sunil, Siddharth, anyone has any query in relation to this? Namrata will ask, answer this query, it will flow or disturb the flow of the class. So, great. But there are certain exceptions in relation to it because every time making a payment by NEFT bank or all these things may not be possible. So what are the exceptions? The exceptions are given in my exceptions are given in Rule 6BD. let's see what are the exceptions. That means in these situations, even if the cash payment is crossing 10,000, then there would be no disallowance. Or even if the payment is, you will not write in the exam when you're explaining this section as cash payment. You will write it as payment in any mode other than account pay check, account pay bank draft, electronic clearing system, or prescribed electronic modes. Okay, you will use this word in technical language. You will not write since the cash payment is of more than 10,000. No. Okay, but this is just to cut the language short and explaining it. So now back to the exceptions where the cash payment is even if more than 10,000, but in these situations it would be allowed. When you are paying to RBI, when you are paying to State Bank of India, when you are paying to Cooperative Bank, when you're making any payment to LIC, when you're making any payment to Credit Society, it would be allowed. You're making any payment to the government, it would be allowed. If you're making a payment to bank, it would be allowed for bill of exchange, etc. If you are making a not making actual payment, but making an adjustment entry. Adjustment entry means I had to give 15,000 to Mr. X, and I had to take 20,000 from him. So what I showed, I had to take. I had to pay 15,000 adjusted entry dal diya, right? So now you will, as an auditor, not say that 15,000 is not made in the mode prescribed. Is not made in the mode prescribed. And hence, this is a disallowance. No, it's a basic adjustment entry, and that is allowed. And that is allowed. If I'm making a payment for agriculture or forest produce, or for livestock, if I'm making a payment for fish products, if I'm making a payment for horticulture or apiculture, because these payments will go to the people who are ultimately cultivator or grower or producer. When I'm giving this payment to the cultivator, grower or producer, when I'm making a payment to them directly, I believe they may not have bank account or they may not have access to electronic facilities. So in that case, I can give them the cash payment, and that would be allowed. That would be allowed. Or if I'm making a payment to any person who where they are manufacturing any product without the aid of power. Matlab, there is not full-time power and they are into manufacturing, that we would be allowed. If I'm making a payment to any person who is in a village or a town where there is no banking facility, abhi there is no such town, but where there were town where there is no banking facility, then such payment can be made. If I'm making a payment of retirement benefits to any employee up to 50,000, I can make a cash payment. If I'm making giving a payment to any person who is temporarily posted on on a ship or so other place, then I can give them a payment in more than 10,000. If I'm making a payment to my agent who will ultimately make the payments to these people, that also would be allowed. If I'm making a payment to any foreign currency dealer, just say I have to take dollars and I have to give them rupees, obviously that I would pay in cash, that would be allowed. So these are the exceptions which you will go through, you will understand it, not very tough to go. So this is all about 48.3. Next are 48.7 and 48.9. Forty-seven and 48.9. 48.9 students अभी थोड़ी देर पहले ही we studied 48.9. We studied just few minutes back, where we were talking about the sum which gets allowed. I believe there is some internet problem. So, in exception, there is no limit. Exception में you pay 50,000, 60,000, 70,000. There is no limit except that gratuity वाला part. Yeah. So 40A7 and 40A9 may, what are the expense, a part of expenditure, which is 49 may, a part of expenditure, which is 9 I'm talking about, which is allowed in section 36 subsection 4, 4A or 5, and the other part which is disallowed. That disallowance for section is 48.9. वो pension वाला question which we did, उसका disallowance का section where 60,000 was getting disallowed, 60,000 was getting disallowed in 48.9, and allowance was happening in 36.1.5. Simple. And 47 says that gratuity would not be allowed on provision basis. Gratuity would only be allowed when it is actually paid during the year. For you, 48.2 and 48.3 are very, very, very important. Students, let's try to cover 2 more topics for the day, because practically from next class we have to start capital gain. Even after taking 3 hours long classes, obviously there are certain things which are left, but let's try covering 2 topics and then we'll pause. If not 2, at least this one. Profit chargeable to tax, section 41. Section 41 में, if you will see on your table, if you will see here, कुछ देखा सा लग रहा होगा. I mean, balancing charge is something which we have discussed, correct? Recovery of bad debts is something which we have discussed, correct? Right. Sale of capital assets used for scientific research was not discussed. That we'll see. Section 41 में balancing charge, remember what where there was a concept of SLM depreciation, वहाँ पे we discussed. So 41.4 and 41.1 has to be done. That we'll do now. So let's see. See, 41.1 is a very simple aspect which says any expenditure which you claimed, any expenditure which you claimed as deduction or payment which you claimed as deduction is not to be paid anymore, Any expenditure or payment which you claimed as a deduction which is not to be paid anymore should be your income, Simple as students. इसका सबसे best example वैसे comes in water bills. Suppose on accrual basis, water bills I was treating as expenditure 5,000. New government formed in and they waived off this 5,000, that this 5,000 is no more payable. I had claimed expenditure on it, right? I have claimed deduction on it, 37 May general business expenditure, correct? But now the government says we are waiving off the water bill charges, so no need to pay. So 41.1 May, this amount would become taxable. That means you will add it back. Simple concept. I had claimed deduction, but it is no more my liability to pay. I will add it back. Simple. So this is what 41.1 is. That's why it becomes deemed profit. 41.2 balancing charge we have already discussed. I'll not discuss it again. 41.3. Sale of assets used for scientific research. कुछ याद आ रहा है scientific research? Asset used for scientific research में students remember we used to claim full amount as deduction on capital expenditure except land, right? So agar plant and machinery, if any plant and machinery is used, full 100% deduction you used to take. If any building was used for scientific research, full 100% deduction you used to take. Now what has happened? Scientific research is over. Scientific research हो गया, 3 years का scientific research था, 4 years का research is completed. We got the product which we were finding it off. Now what will happen to those assets? Either they will be used for some other purpose, either they will be used for some other purpose for business, not scientific research, but some other purpose for business, or they would be disposed of without being used for any other purpose. For any other purpose. So let's take an example in a mind of a building. I claim full deduction for building. Now scientific research is over. Now that building is being used as my office. What will happen? That building would become part of the block of the asset. That building would become part of the block of the asset, but at what actual cost? At nil cost. At nil cost. It would be added as a block, but the cost would be nil. And when in future it is sold, the section 50 may block of the asset, part of the block of the asset, you will see. Clear? Yes. But if research is over, now I am selling that building out. I am selling that building out. I will receive money, right? I will receive money. What will happen now? I am selling that building out. So whatever, remember, specified business name, whenever you sell it after 1 year, 2 years, 4 years without using it for any other purpose, or 10 years, 15 years, everything was PGBP income as per section 28. Here, scientific research may section 41 gets triggered whenever you're disposing of an asset without using it for any other purpose. Then whatever expenditure you have claimed as deduction, or the sale proceed which have been coming from that sale of building, whichever is lower would be my PGBP income under section 41. Whichever is lower would be my PGBP income. So if the deduction was claimed for 100, the building has 100 crores, the sale proceeding has happened for 80 crores. So my PGBP income would be 80 crores as per section 41. If the deduction claimed was 100 and the sale proceeds were 80 crores, then lower part would be my PGBP income. And the same concept, if anything is being, any amount is recovered for more than cost, any amount is recovered, that will go to capital gain. That means, suppose 100 crore there was a deduction which was claimed and that was the cost itself. 120 crores I have received for the sale of that building. So 100 crore would be my PGBP income and 20 crore would be my capital gain income. Deduction or sale, whichever is lower, would go to PGBP. Deduction claimed or whichever is lower would go to PGBP. Over the cost will go to capital gain. Always over the cost will go to capital gain. Clear? And these things to become taxable, it may not be necessary that you are having a business going on or not. If it is recovered, if these are happening, it would be a taxable income. Business losses wala point hai, which I'm not explaining because business losses you have to understand. Last concept for the day, promise. Pooja, I know we need to take it in the next class, but let's promise last concept. I have asked for the extra class. Let's see what happens. This we have done multiple times. 43B is one such section which I was saying continuously when we were doing section 36 subsection 1 clause, not particular clause, but in so many sections we were saying. 43B says that to claim the deduction, you have to actually pay this particular sum on or before the due date of return filing. Then only you can claim such deductions. What are all covered here? Tax, duty, cess, fee. If I'm claiming any such thing, I have to pay it before return filing. any contribution, employer contribution to provident fund, approved superannuation fund, approved gratuity fund, only when actually paid before due date of return filing. Bonuses before due date of return filing, commission before due date of return filing should be paid. Interest on loan we have already discussed, should be paid before due date of return filing. Leave encashment, D, E, F point are interest on loan only. Leave encashment before due date of return filing should be paid. And if you are paying any amount to railways, if any amount is payable to railways for which you are claiming an expenditure, should be allowed as deduction when only actually paid. Over. No more point. 43 CA. Okay, we'll begin in the next class. Up till now, students, I think all the all the practical sum related questions can be done except presumptive taxation. And 43 CA. We have covered all the whole PGBP part except 43 CA and presumptive taxation. All of your questions can be done. Okay. So 43 CA wala part will begin in the next class. Then we'll go to 44A, 44AB and presumptive taxation. And then we'll start capital gain. So we'll divide the next class in two parts. First part before break would be for PGBP. And after that would be for capital gain. Okay. So meet you in the next class. Any queries which is unanswered, you can ask. Remember, students, always that PGBP until and unless you will do the question by understanding the concept, it would be more of a ratification, and since there are so many things, you will ultimately forget it. So the point is why we are taking, all of us, we are putting so much of effort is so that you understand the concept in relation to it and not just simply do. Okay, so now go back, revise all the deductions, revise all the inadmissible deductions, do the questions, do comprehensive questions now, except these parts, and we'll come back. Thank you so much.